I think there's still quite a bit of capital on the sideline in China. They're waiting for clear signal. The main number you have to grapple with is it's a 350 trillion renminbi housing market cap per se, right? That's total value of housing stock that is in the market. 60% of every household balance sheet is real estate. When you lock 20% of 350 trillion renminbi off, that's 70 trillion renminbi of value locked off the household balance sheet. So that takes 10 to 12 years of 5% GDP growth to replenish, even from that simple math. So consumer sentiment is not there, confidence not there. That's affecting consumption and obviously affecting people's desire to buy homes, which historically has been how they put their savings into.
So against that backdrop, are you feeling acquisitive? Are you looking for some distressed assets there?
We are constantly looking at distress, just like even we ventured back into U.S. office, right, which is a no-no land, but it's a contrarian bet. And obviously we're hoping to find contrarian bets in China, but the banking system in China doesn't allow the reset mechanism that U.S. and Western markets have. So these distress don't come as fast and furious as it does in a more developed market.
Your recent sale of mainland China logistics center to Ping An, what was the rationale? Are you looking for more exits?
Yes, we're a fund manager, right? So we're constantly in the market to generate liquidity for our LPs. Our business is if we deliver liquidity back to our LPs, they give us more money to look for opportunities. Logistics happen to be a sector that has a lot of demand. Ultimately, there is a lot of capital inside institutional investors' coffers in China, but they need investments that generate high enough yield for them to match up with their liability. So logistics happen to be a good sector. I think data center will be another good sector. For example, our outlet mall business in China, in a way, because of the consumption downgrade in China, people are, for example, tier 1 cities, McDonald's is booming because people are going down to McDonald's. But in tier 2 cities, McDonald's are considered expensive. And our outlet mall, because we cater to the brands selling excess inventory, people are flocking to try to buy discounted brand name goods from the outlet malls versus the mainline store. So that's another area where cash flow is strong and the rents have been going up.
Let's talk about your expectations for your new India office and the market. Is this a bet on China Plus One?
It is and it is not. It's a tricky market. I think China Plus One, the easy bet is obviously Vietnam and Mexico. India, with the population, should play a big role. But I think one of the hindrance of India playing a big role in China Plus One is unwillingness to let Chinese factories open up more factories in India. Right? They're not as welcoming to Chinese factory owners opening up factories there. And ultimately, the U.S. buyers, the Western buyers, want to buy from existing supply chain. Right? If the Chinese factory owner in China already supplying to those buyers are owning those factories in Mexico or in India, they will get the order book right away. Whereas a new Indian producer will take some time to be qualified as a vendor.